So good evening, everyone. My name is Dipesh Deshmukh, and welcome to yet another amazing uh, event by IBG. This is a master class. We are going to learn something from an expert today, and I'm sure it's worth learning because we're going to talk about money. Um, Before we start our session, I can see there are some non-members as well. So a very quick introduction, IBG is India Business Group. We are a chamber of commerce, and the entire focus of the chamber is to help our members get business, get connects, get national as well as international connects. We are working with a lot of international chamber of commerces. We are keeping B2B meetings even in this lockdown period so that our members will get international mileage. So having said that, the chamber is founded by none other than Mr. Vikash Mittersen. Vikash, can you quickly say hi to people?
Oh, hi. Welcome all of you all, especially Navneet. He's the leader for today and for always. Thank you.
Thank you, Vikash. We also have with us our CEO, Ms. Priya Pansare. Priya, can you please say hi?
Hi, good afternoon, everyone. Good to see you at this hour also. Thanks.
Thank you, Priya. And I would also like to thank Girish and Siddhi. They are our absolute big support for IBG and for all the members. So a big thank you to both of you. Before I introduce our speaker, very quick request, kindly keep your videos off. If you have any questions for the speaker, for Navneet, you can type them in the chat box. And at the end, we will do a Q&A session and ask those questions to Navneet. All right. Also, if anyone is here for the first time, kindly in the chat box, put your name, mobile number, and email address so we can update you all with the upcoming webinars and any other events that we are doing. All right. So please do that. All right. So it's my absolute honor and pleasure to introduce our today's speaker, Mr. Navneet Munot, who is the Chief Investment Officer of SBI Funds Management. His role is to oversee investments worth US dollars 100 billion across various asset classes. Now, my question to Navneet is like, how many zeros are there in 100 billion? Navneet has over 25 years of rich experience in financial markets. His previous assignments were with like amazing companies like Morgan Stanley Investment Management and stuff like that. I'm not going to read his entire profile. It's really long. I don't want to take all the time, but a few important things I'm just very quickly going through. Navneet is the chairman of Indian Association of Investment Professionals. Navneet is also a nominee director on the board of SBI Pension Funds Private Limited. He's a postgraduate in accountancy and business statistics, and he's a qualified chartered accountant. He's also a charter holder of the CFA Institute and the CAIA Institute. So, Navneet, we are very happy and excited to have you once again in IBG. I know a couple of years ago you had done a fabulous session on budget, and today we are all ears on hearing you about how we can handle money. Over to you, Navneet. I've unmuted you. You'll have to.
Yes. Thank you so much for that nice introduction, for having me. It's indeed a great pleasure to be with all the IBG members again. Last time we met in Good Vibe and BKC, and it was a great venue, great place, and great conversation. So it's always a pleasure to be among your members. I mean, anyone who said that may you live in an interesting time, probably refer to the time we are living in. They can't get more interesting. And you know, Lenin said that there are decades where nothing happens, and there are days when decades happen. We are going through those days where almost decades are happening. And in the month of February, if we go back, nobody could imagine that the next 4 months are likely to be the way they have turned out. And initially, even about this crisis, people thought it's there in China, you're reading something about it, but nobody could imagine that almost the whole of humanity we will have to deal with such a big crisis. Then in March, again, I think over the first few days, people kind of neglected it. A point came when everybody in the world thought that lockdown is the only way to deal with it. And maybe at that point in time, we didn't have an option. And of course, India had probably the most stringent lockdown relative to any other part on planet Earth. And at that time, over a period of time, there were a lot of hopes about, okay, we'll be able to get some cure about it, maybe some treatment for the disease. Also, I think people were hoping that as the summer sets in, virus will start diminishing, so on and so forth. And then what the lockdown gave us over those couple of weeks is, I think, how do we learn to live with it? Because I think given the overall damage to the economy, it was almost impossible to keep people in the complete lockdown. The way to deal with it, as we learned, was that you have to do as many testings as possible. So testing, tracing, isolating, and informing. I mean, that's the way. And now we have moved from a phase of focusing only on survival to revival also. The focus has moved from anticipating a cure to how do we protect ourselves, and a large part of the world, a large part of the humanity can come back to work and have normalcy back. So focus more on, I would say, sanitization, on disinfection, social distancing. The mask seems to be like working pretty well against it. For businesses also, how do we work on protective gear? How do we ramp up our testing capacity? We work on some kind of, on the work on antibody, etc. This zigzag will continue. Wherever, I mean, we have seen across the world, you open up and then you see some cases, a bit of shutdown. But I think governments world over have decided that we have to focus on revival also, apart from the survival. I think from everywhere, from a central government, it becomes more to the state government or local government. And my view is that from here on, governments will play a smaller role. It has to become a citizen movement. It has to be communities, businesses, societies, citizens. Then how do we deal with it so work in a normal fashion? If we can find a good way of taking care of people who are old and vulnerable, then a large part of the economy can come back to normalcy quickly than what anybody would have anticipated or would have feared maybe a month or 2 months back. And just to give an example of how it needs to become a citizens movement, I was talking to somebody in Shanghai yesterday, and he was saying that moving around without a mask is seen as like moving around naked. I mean, you can't think of moving around naked. Now today, if you see somebody on the road without wearing a mask, people have started thinking like that. I think that has to become a movement. And I've been like writing from May onwards that people have to think about it in a way like a road travel where, I mean, there is risk when you are driving, but we have found various ways. You have seat belts, you have airbags in the car, you wear helmet. If you're driving a two-wheeler on an expressway, you get the insurance of the car done. The governments have provided a nice infrastructure in terms of having the lighting on the road, dividers on the road, signals, and then all of those kind of things. And that's how we have to deal with it. I mean, I can give the analogy from the airline industry. And I think also I strongly believe that for business leaders everywhere, it's going to be very important to have a lot more focus on healthcare as well as reskilling of the employees. And I'll come to that a little later when I talk about the whole survival to revival. Now, when I look at the India and where we are in the COVID, I'm sure everybody is reading a lot more and I wouldn't take too much of time. There are two ways to look at it. The one way to look at it, the pace at which the numbers are going up. We are seeing the fastest ramp up that we have seen relative to our own history and also relative to a lot of other parts in the world. Cases are doubling almost, every 20, 22 days. And just to put that number in perspective, I mean, in US, they were doubling in 40 days. We have seen around 5 odd lakh cases getting added in last 12 days. We are almost 10% of the global cases now. There are another way to look at it, that there are 3 states which account for almost 2/3 of the cases. There are 200 districts in India where there are less than 50 cases. There are almost close to 200 districts in India where there are 0 deaths. Fatality rate is like the lowest in the world. Recovery rate has consistently been improving. I mean, the antibodies seem to have got developed in young people in metro. I think you are seeing improvement in places like Mumbai and Delhi. The only worrisome part that I see currently is, I think it's spreading a little more in the tier 2, tier 3 town. Earlier, it was more a challenge with, I would say, more cities like Mumbai, Delhi and all. Now we are seeing more in the tier 2. I think this zigzag will continue till the time either the herd immunity get developed, or we get a vaccine, or some, a miracle on antibody, or the treatment. Till such time, the whole world has to learn to live with it, and maybe we'll have to find ways to live in a new world. When I look at the economy at our end, again, I mean, there could be two different set of ways of painting the whole picture. I mean, we watch huge number of high frequency data. We look at e-way bills and electricity consumption, the toll data. We look at, like, definitely website traffic of different kinds of things. We look at freight movement, passenger movement, vehicle registration, diesel petrol consumption, TV advertisements, currency in circulation, various kinds of metrics we look at. Again, I mean, you can either look glass half full or glass half empty. There are definitely a lot of signs of improvement. I was just now, a few minutes back, I was talking to one of the largest passenger vehicle company. They are clearly seeing improvement as there is more demand for entry-level vehicles. Or, I mean, you can speak to some of the other people who will have a different picture. How to deal with it, what businesses need to do, I'll come to that in a few minutes time. I'll just take few minutes, the chat we were having just 2 minutes before we started the session. Why there is such a big disconnect between what we are seeing on the ground in terms of macro activity, or in terms of what's happening on the COVID crisis, and what we are seeing in the stock market or bond market or the gold market. Why there is, I mean, somebody has just posted why the stock markets are defying gravity when we are seeing such a big challenge in the economy. And it's not only about the economy, but the health crisis is unprecedented. The economic crisis is absolutely unprecedented. The world economy has not seen in last 100 years what we are seeing now, or what we are going to see in next few quarters. A big social crisis, whether you look at riots in US or you look at migrant crisis in India, rising inequality, the climate crisis, I'm sure everybody knows about it. The floods that we have seen, whether in Bombay, whether in China, whether in Korea, whether like a lot of countries, Indonesia, unprecedented. I mean, 2020 seemed to be like really very, very interesting year. And one of the biggest geopolitical crises, and I call it the new Cold War. And it's going to be very interesting than the previous Cold War that we have seen between West and USSR and allied countries, between the US-China or Western China, India-China. The repercussion of oil prices will have huge geopolitical repercussion. $40 and below, a lot of countries would be in deep trouble. So we are yet to see that. Now, amidst all of these challenges, we are seeing the stock market going up every day. And you have seen S&P having the best quarter in last 20 years. You have seen Nifty the best quarter in last 11 years. You have seen the mid cap having the best quarter in last 6 years. And why is that? I mean, the one way is that the crash was historic in the month of March. In February, markets were doing very well. Everybody was hoping for an economic recovery. But then a big crash happened. So valuations became very cheap. And at those cheap valuations, even if you assume that economy will have a recession in 2020, will have a recession, even if it in 2021, valuations are still very comfortable. I mean, humanity will continue to have a lot of growth over the next several decades. Also, I think it's about the expectations versus, or the fear versus expectations. So when we had only 500 cases, Nifty was below 8,000. And at lakhs of cases, Nifty is above 11,000. Because as I mentioned earlier, the mindset has switched from survival to revival, and we are looking at revival of the economy. There's a lot of faith in human ingenuity. We are going to see something on vaccine coming up, or maybe some treatment coming up. There's another very big reason, and that's very interesting. I'm sure a lot of people would be aware of it. It's called a Robin Hood effect. Las Vegas is closed, so I mean, people are there in Wall Street. I mean, as simple as that. I'm trying to exaggerate it, but that's a reality. I mean, all the gambling sites are closed, all the Las Vegas is closed, everything is closed, and people are punting in the stock market. And I'm serious about it, because I think there are a lot of data points that suggest the number of new people who are coming to the stock market globally, the number of the amount of volume that you see in retail versus the institutional, the delivery volume versus overall volume, that clearly suggests huge amount of retail activity in the market. But I mean, all of these reasons are responsible. The most important reason for the markets to go up is the liquidity which has been unleashed by the central banks and the fiscal stimulus. If the crisis is unprecedented, the response to this crisis by the policymakers is unprecedented, to say the least. The amount of money US Fed has pumped in, they've never done that. Even in the 2008 crisis, ECB didn't do it. After the 2011-12 Euro crisis, no country has done what central banks have done in last 3 months. And you add the fiscal stimulus which has been provided. Just to give you 1 or 2 data points, the US M2 growth, the money supply growth, has gone up by 24% YOY. This is the highest number since 1960. So has it grown higher than that before 1960? No, because the data started getting reported from 1960. So this is the highest in history. Just to put that India's number in perspective, our money supply is now growing at 12%. Now it looks, 12 doesn't look that high a number, but you have to put that in a context that when nominal GDP was growing at 9-10%, the money supply was growing at 8-10% over the last few years. Now the nominal GDP is declining and you have a money supply growing at 12%. So you know the amount of free liquidity which is sloshing around and which is helping the market. And there are a lot of similarities between the bull market that we had between 1990 we are seeing now from the central bank action and the impact of the liquidity on the markets. I wouldn't go much deeper into it. Later on, if you have interest, I can talk a little bit more about the markets. I'll just make 2 or 3 very quick points on global macro. Central banks over the last several years are doing, have been pursuing extraordinarily accommodative or easy money policies. Interest rates are at the lowest level in the world. In the last 40-year bull market in the bonds, they've unleashed so much of liquidity. They are using all tools in their armory to kind of deal with this recession, or over the last few years to deal with every other economic challenge. My sense is that now that they have very limited amount of tools left to really prop up the economy, the mantle of pushing the economic growth has to shift to the fiscal policy. Governments everywhere in the world will have to do whatever it takes to get growth back, to create jobs, because private sector won't be able to create as many jobs. And they have to invest money in physical infrastructure, in digital infrastructure, in social infrastructure, which is like healthcare, education, new digital infrastructure, new roads, new bridges, new renewable energy, so on and so forth. And I think that will be the best thing that can happen to the world. No crisis should be allowed to waste. And my view is that it's only a matter of time. Governments world over, policymakers world over will realize this is the only way we can start a new cycle of big growth. I mean, we have been just focusing on the survival today, but we have to see a revival of the global economy over the next 10 or 20 years. The global economy has been growing at a much lower rate than the previous growth rates. But if we want to get global economy back on the growth, then it has to be infrastructure investment by the governments world over. We can discuss, I have a lot of views about world, dollar. Maybe if there is interest or commodities, we can discuss that a little later. I'll just straight jump to what's happening in India and my view on the macro in India. So we had the most stringent lockdown relative to a lot of other countries in the world, and that's why the demand shock was deep in India. The supply shock was deep in India. Even if you wanted to run your factory, you could not because you were in a shutdown. Even if you wanted to go out and consume something, you could not because you were in a shutdown. Now, interestingly for India, it is even before this lockdown, for last 7 quarters, Indian economy was slowing down. And all the 4 engines of growth, there are 4 engines of economic growth. You have private consumption, private investments, exports, and government expenditure. And in some of these cylinders were already slowing down. Government expenditure was was helping the growth momentum. Now, given the overall situation, even that is also kind of slowing down. Government tax revenues are decreasing, and government has been kind of not very aggressive on giving a large demand stimulus to the economy. So consumption has slowed down. Private investment was already slowing down. Looking at the global environment, as exports will have a challenge. Now, getting into this crisis, before this, the crisis in March, expectations were that given all the reforms that have happened in last few years And given the low base, India was supposed to get on a path of slow and steady growth from March quarter onwards. But unfortunately, now this crisis has come. As we have got into this crisis, there are two challenges for India. One is that our fiscal ability to stimulate the demand or to really kickstart the economy is limited relative to a lot of other countries. The government is trying its best, but I think not as much demand stimulus as one would like to see given the situation on the ground. Number two, we had some challenges in our financial sector. We had this NBFC, HFC problem. I mean, one of the bank that had an issue like last couple of years. PSU banks have their own set of challenges and then have gone through this merger process, etc. So credit growth overall has slowed down. I always say finance is the lifeblood of the economy. Credit is very critical for economic growth, and we had certain challenges on that front. But otherwise, overall, when I look at the crisis today, and when there are a lot of challenges, I'm sure each one of you who are running a business or running a profession, I'm sure you are aware of the ground reality in your business. But there are a lot of positives, a lot of, I would say, aspects about Indian economy which we should not lose sight of. First of all, the external balance sheet is in a very, very good shape. I mean, compared to any other crisis in our history, more than $500 billion of foreign exchange reserves. And in fact, I've been recommending that government should actually think about setting up a small sovereign wealth fund. Either we put money in startups for innovation, or we can recapitalize banks, or we can use it in some manner professionally managed. But because we have a shortage of risk capital, because $500 billion plus invested at like earning 1% in US treasuries, etc., is a big cost to the economy. So we should think about it. We can buy crude oil in forward market and then create a storage capacity in India and buy a lot of crude oil for next few years, because I think that will be interesting. So, but whatever it is, whether we use it or not, but I think the external side India looks good. FDI flows have been very strong. I mean, the FII flows were down, but they have started improving. Current accounts from a deficit, we have gone to surplus. Rural economy has been doing well. Everybody is aware of that. I won't speak much. They have got less impacted by the crisis. Good monsoon. I mean, last harvesting was good. Sowing for this crop is good. And they have a positive wealth effect because gold prices have kind of doubled for them. Government spending has been quite a bit on the rural economy. Everybody knows about, I call it Y2K movement for India. So in sectors like electronics, in sectors like chemicals, I mean, all the companies that we speak to, we get a very positive commentary from them, a very positive vibe from them. And I think with all these new PLI and some of the other schemes, we are likely to see that in some of the other industries also, where the supply chain starts getting shifted out of China, and India will be able to gain some market share in some of these industries. I mean, if I always say this, if data is new oil, then India should be leading the new OPEC, whatever you call it. I mean, the new data economy. I mean, India is likely to be a leader. If AI is the future of the world, artificial intelligence, for which you need big data, and this is the country which is creating that big data. 1.3 billion people having a biometric card, a smartphone, ubiquitous connectivity, and the pace at which digitalization is taking place. And now this COVID crisis is going to make us leapfrog. And I always say this, we are the most data poor society. We are becoming now the most data rich society in the world. There are umpteen opportunities for variety of businesses. And I think we are going to see a lot much more e-education, e-health, I mean, e-governance, e-entertainment, e-finance, e-payments, in fact, e-judiciary. I can just go on and on. And I think that's a big opportunity for India. Globally, hundreds of billions of dollars will get spent on the healthcare sector. India is the pharmacy of the world. India is the vaccine capital of the world. And what stops an Indian doctor to perform a telemedicine as telemedicine becomes a new norm in the world? What stops an Indian teacher to run a school from India teaching kids sitting in US or Africa or Latin America? What stops a fund manager like me sitting in India and managing money anywhere in the world? I think this is a real big opportunity for India as the world becomes more virtual. I'll just take 2 more minutes on it because I have a very different view on globalization. You would have heard a lot of experts. I would also say globalization, the way we have seen it, I think is probably is undergoing a massive change. Every country will focus on, getting a more reliability on their supply chain. Every country in the world is becoming more protectionist, whether tariff or anti-tariff barriers, getting a lot of supply chain or a lot of manufacturing in the domestic market, particularly in the critical areas like, let's say, healthcare related supplies. On the other side, my view is that the world actually going to see a lot much more globalization than what we have seen. Think about the services sector, what I talked about, the e-health or e-education, or maybe different kinds of connectivity. What is globalization is the people-to-people connectivity. At government-to-government level, we are going to see a lot of rift in the world. At people-to-people level, we have never been connected. Humanity has never been connected as we are connected today. And the internet is breaking those barriers. I think the potential for several businesses is only constrained by the imagination or by the execution ability. The last point I want to make is, and I always say this, reforms, big reforms never happen out of conviction. They always happen out of compulsion. And the compulsion of this crisis will lead to reforms which otherwise would not have happened or would have taken much longer to happen. And seen last couple of months, what we have seen in agriculture, I'll just give one or two examples and then we move on. I mean, the dismantling of APMC or dismantling of the Essential Commodities Act, and what we can do in agriculture in India is just unimaginable. I think India can actually be a big, I would say, just like we think about the factory of the world or the services of the world, I mean, why not farm of the world? I think given the sheer, I mean, the soil conditions, the water conditions, the sheer number of labor supply, the sheer number of I think the variety of the conditions that we have. And I think our productivity is extremely low. There are two big challenges in agriculture sector. I mean, I just thought I'll take 1 minute if there are people linked with that sector. We have a big problem in the agriculture. One is the price discovery, and second is the value addition. We don't do as much value addition as we can, and we don't do a good job on price discovery. There are a lot of distortion because we don't invest as much in the the markets and warehousing capability, in the logistics, cold storage, etc., etc. And I think when we remove these barriers, what I talked about earlier, there's huge potential on that side. The world will look at a lot much more, I would say, an organic food and natural food and herbal and nutraceuticals and all of that. I think there are going to be very, very interesting opportunities on that. And I think Indians are rising to the occasion. A lot of people talk to me about, that, only the big businesses will survive. A lot of SMEs, MSMEs are going to be in deep trouble and all of that. I have a slightly different view. MSMEs are like 30% of GDP. They are like almost 1/3 of the GDP. They are almost 40-45% of exports. And just to give like one example, India wasn't producing a single PPE on the day we got into this crisis. And today, like what number? 800,000. And it's not an easy thing. It's not like a garment, you stitch it differently. I mean, there are locking and all of those challenges. So, I mean, it clearly shows how the hosiery guys and different kinds of SMEs and MSMEs rose to the occasion, whether it's a sanitizer, whether it's the mask, and a lot of innovation is happening. And I always say this, that you need some constraints. You need some necessity for inventions to happen. And I think all the business community, salute to them. I think they are rising to the occasion and they are fighting these challenges and coming up. So I'm sure over the next several months, several quarters, I think as we go through this crisis, and I don't want to underplay the challenges that the humanity has or the challenges that global economy is facing. I'm sure there are a lot of challenges there. But I think if we rise to the occasion, the sheer opportunity in India, given that we are a very large market with 1.3 billion people, given that we will be the biggest supplier of labor pool to the world on a skilled side, semi-skilled side, unskilled side for next 30, 40, 50 years. The West is aging, Japan is aged. I mean, now China is aging. As people say that China has aged before it could become rich. I think India is the place for next 30, 40 years, will be the biggest supplier of the labor pool. And in a globalized world where we are virtualizing everything, our ability to reach out to the world has clearly increased. And from a geopolitical perspective, while I talked about the new geopolitical challenges for the world, but when you look at the global map and I think about the geopolitics, and the more I think and the more I come to this conclusion, India is at the right place at the right time. There are few of those moments in history where you just get too lucky to be at the right time at the right place. Now, it has been the case with a lot of countries over hundreds or thousands of years. That moment has been there for us also several times in our history. Going back, I mean, in 18th century, we were like 1/4 of the global GDP. We were the largest exporter of the world. I mean, and we were the shining star in the global GDP. And then from the 25%, we fell to like less than 1% or 2% of the GDP over the next 200 years. And in last 60, 70, 80 years, there have been a lot of moments where we could probably really take that center stage and could have really taken, our economy to a different league. 91 was that moment, and we really captured it well because we had a crisis and we turned into an opportunity. We have done it several times, but I don't think at any point in time we had an opportunity as big as what we have today. There's so much of money sloshing around in the world. I mean, the cheap liquidity will be constrained by, in fact, I write a monthly note and maybe you can, I've written a little more in detail about it, will only be constrained by our absorption capacity. The world is standing there to pump in as much money as possible. It's about us, how we can absorb it and promise them, a delivery of a contract, promise them ease of doing business, promise them a red carpet and not a red tape, promise them that we will deliver returns if you have trust on us, and we return that trust. I think there is a lot of potential in India. We've gone through a lot of challenges, and I want to have good time for Q&A. So depending on your interest, I'll touch upon that. Maybe I think I can, maybe I'll take a few questions and I'll talk about how, as an investor, when we are looking at companies, whether in our equity investment or in my credit investment, what are we looking at today? When every sector, every business is going through this crisis, what are some of those characteristics or that we are looking at in a business or in a management, or what are we, I mean, when in our interaction with the management, we are kind of communicating to them our expectations. Maybe we can discuss that. But all I would say, next couple of months, we'll have to really navigate this period. The first wave is still yet to get over. So, we don't know how deep it is going to be, how long this crisis is going to be. World has to get prepared for, God forbid, a second wave. If you go back in history, look at the Spanish influenza, it was not the first wave that was so lethal. It was the second wave and the third wave, which really created much more damage. So we don't know yet. I have faith in human ingenuity. I'm sure we will find a solution to it. But if the vaccine takes time, or let's say developments on antibody takes time, we'll have to find more, other ways, innovative ways, more creative ways to deal with crisis, to live with this crisis, and move our focus from survival only to revival also. So on that note, I'll be happy to take a couple of questions. I have a lot of other views on global macro, domestic macro. Yesterday we had RBI policy and all, but depending on your interest, I'll answer them.
All right. So that was awesome, Navneet. You touched upon so many aspects, so many points you gave us, and it was very insightful. And I already see a huge list of questions. So let's start taking some questions immediately, okay? All right. So this is a very straightforward, simple, objective question. Where can we park our hard-earned money? Gold, SIP, or mutual funds?
No, all I would say, one of the interesting thing is that in this crisis and the way markets have behaved, they've clearly highlighted the importance of asset allocation, that you cannot put all your eggs in one basket. You have to have equity. Depending on your age, your return expectations, your risk appetite, your time horizon, your liquidity preference, so on and so forth, which I'm sure any financial advisor can tell you that better, depending on your situation. But you need to have equity, you need to have some fixed income for income or for your liquidity needs, a liquid fund. And of course, gold, it clearly highlighted that what the role gold plays in an overall asset allocation. When nothing else works, gold works well. Of course, we are in a different situation where, because of the central bank liquidity, all asset classes are doing well. It doesn't happen normally. It should not logically. Equities going up, bonds going up, gold going up all together, it should not be. But it's just that the rally in financial markets or all markets is more driven by the central bank money. I mean, a rising tide is lifting all boats, or the central bank liquidity is helping all markets. So you should have a diversified portfolio. The one thing in the month of March and April, I did a lot of these events, and I used to talk about it that a lot of people that should we stop our SIP? There is so much of uncertainty, and I used to say, don't do that, because you were putting SIP when markets were going up. You have to take advantage of the downturn in the market also. And nobody really knows when market will bottom out. It will bottom out far ahead of the bottoming of the problems on the ground, because markets are forward looking. You are looking at the situation today or what happened in yesterday in a newspaper or in a media. But the markets discount things which are likely to happen in next 1, 5, 10, 20, 30 years. So they are forward looking. So rather than trying to time the market, I mean, just keep averaging continuously.
All right. What is the future of property market, both land and constructed commercial and residential property?
Oh, that's a great question. And I have slightly different view than what you would have heard from a lot of people. So on the commercial, like a lot of people saying now this new work from home, etc., there's going to be a structural decline in the demand for commercial real estate. I agree to it, but partially. I agree to it, but partially. Why I say that? You don't know. So maybe people would be a little wary of putting, let's say as a company, you have 500 people. And we always thought when we bought a new office in SBI Mutual Fund, we wanted to be on one single floor. Now we'll think that should we have everybody in one single office, or rather you should have 5 cluster office and like one office, so that, I mean, why don't we reduce the commute for people? I mean, this crisis has shown the importance of disaster recovery or your business continuity, etc. I think maybe those smaller offices in various places, instead of having everybody in one single place, that might undergo a change. And also I'm sure that the commercial real estate will also come in variety of forms. For example, on the residential real estate, my strong view is that when people do more of work from home, etc., maybe the residential buildings will have business centers, and a coffee shop and business center will become more important or as important as a gym or a swimming pool or a party hall in a residential building. So a lot of changes are going to happen. And now think about it on residential real estate. Now everybody's saying, and people have turned very bearish on real estate. Because of the challenges in the real estate, builders will have no option but to cut prices and to take a hit on their profitability, or even lenders will end up assuming, you know, a lot of these real estate projects, because builders will be out of the equity capital in those projects. In that case, lenders will have to sell those properties. If prices come down on one side, on the other side, think about it. For a place like Bombay, I'm clearly seeing over the last few years, the gap between rental yield on residential real estate and the EMI yield, your mortgage yield, is actually shrinking. We used to be 1-2% on rental yield and let's say 8% on the EMI mortgage yield. So there was an incentive to put that money in a fixed deposit or in a debt fund and live on rent. Today, that advantage is shrinking, or I would say that incentive is shrinking, because if you compare the rental yield versus the EMI, 6.5%, 7% versus 3.5-4% rental yield, or if you keep the money in fixed income funds which are earning in a AAA bond fund 4-5% versus the rental yield or versus the EMI, whichever way I look at it, if there is little bit of correction in prices, I expect a first-time buyer or a second-time buyer to actually look. When I say second time, is basically a bigger house. People are working from home. You have 2 kids doing their virtual classes. You have, husband, wife working, and they are finding it very tough in 1 room or 2 room. Your aspiration would be, despite all the salary cuts and the challenges, the aspiration would be at the first opportunity, whenever you can, to buy a bigger house compared to wherever you are today. You are feeling your house is smaller than what you need. From that perspective, I'm not as negative, honestly, if you ask me, on real estate as people are. Equity markets have gone up. If they go up a little bit more, if bond yields fall more, people will think that real estate is not a bad idea. Gold has also gone up.
All right,
I gave a little longer answer because I
perspective.
have a different view. That's why I gave a little longer answer. It doesn't mean that there's going to be a boom in real estate the way we saw in the previous cycle. It will take time. We still have inventory. We still have a big challenges with the construction industry. But when you have that challenge in the industry, which means incremental supply for next few years is going to be limited. Who's going to do a new Bhumi Pujan of a large project today, given the environment? So then at some point in time, incremental inventory accretion is going to reduce.
True. Cool. All right, next question is, we are hearing that SBI will be privatized in few months or weeks, or 51% stake to private company. How far our money and pension money is protected and secure?
Absolutely secure. I mean, SBI is, I would say, the most prime institution in India. I mean, a history of 200 years. My parent, State Bank of India, takes huge pride in saying banker to every Indian. I mean, I, as part of SBI Mutual Fund, take huge pride in saying we want to be the wealth creator for every Indian. We have like 50 lakh folios in our SIPs, and then of course almost double of that as a total number of folios that we manage. And I think it's 58% owned by government, but even otherwise, I mean, it's an absolute prime institution, almost more than 20% of India's banking system, more than that for India's financial services system, the largest bank, one of the largest insurance company, the largest asset manager, credit cards, general insurance. I mean, I can just go on. And SBI has served the nation very well for last 200 years. And every single crisis, a lot of these calls that I do, particularly with my friends in the SME, MSME, large corporates, all kinds, everybody praises that the SBI is the one which does the hand holding, across all different cycles.
All right. So we should be at peace, right?
Absolutely at peace.
Cool. So which is more promising sector for new startups after the pandemic?
Interestingly in India, I mean, there are, unlike like some of the other countries, given that we are 1.3 billion people, we are just $2,000 per capita as a starting point. We have a long way to go. I mean, when I look at India today, $2,000 per capita, we are where China was around 2003 or 4. And look at where China is today. It's like 5-6 times of Indian per capita GDP or India's GDP. We are where Korea, Taiwan, these countries were in 80s. We are where, let's say, Japan was in 70s, UK was in 60s, or US was in, let's say, 50s. That's where we are today. And see the journey of those countries over the last 50, 60, 70 years. Will our journey not be the same with democracy, with demographics, with demand? And the most powerful force which is getting added to these 3 or 4 Ds that I talked about is the digitalization. And from a startup perspective, a lot of people, and I'm seeing the same thing maybe one more time, a lot of people ask me that now there is such a big crisis, now only the larger businesses will survive, smaller guys will have trouble. I have a completely different view. I think the businesses that will do well are the ones who are very nimble, who are very agile, and who can adapt to the new reality rather than the businesses who have a large physical assets today. Because, I mean, think about a Zoom. I mean, did we even hear about this Zoom platform 4 months back and what Zoom has done to the world? Logically, this space should have been taken by Skype or maybe a FaceTime or some of those guys. I don't remember in last 3 or 4 months using them. I've been using Zoom and some of the other platforms. I think it's your adaptability which will really decide whether you do well. I've talked about a couple of sectors from a data perspective. I've talked about opportunities in the rural economy or agriculture. I've talked about, I mean, whether the healthcare or the overall in the technology sphere, even in financial services. I mean, look at, of course, the overall our what we call IFA, individual financial advisor or distributors and all that. I mean, the size of India is so large. I mean, every market is underpenetrated. Every market is underpenetrated. It's just that the way of doing business is going to undergo a massive change, and you have to find your own space within that.
All right, cool. I'm going to combine 2 questions because they are very similar nature. So the first question is 6,000 to 7,000 crore has been going to SIP segment. What is your advice on this part of investment for small ticket investors? And a similar question is, what is the point of investing in SIP if it's not going to help us in the time we need it?
No, I think SIP, the whole idea of SIP is to keep averaging across market cycle and do not depend on market timing. That, okay, now market has gone up, should I invest? Now market has gone down, should I stop, or when do I restart? It's very difficult to do that. And I can give you a lot of data points. Over the last 40 years, if you were very lucky and you ended up investing in every calendar year, the bottom of the market, I mean, you were so lucky that you had a crystal ball and you thought that today is the day when Sensex or Nifty has bottom and I'm investing that day. And you did that for 40 years. Or you were so unlucky that you ended up investing every single year on the day market peaked every single year. Or you just did first half of the every year. And if you see the returns of all of these three investors over the last 40 years, the difference is not too large. What it goes on to say is that over a long period of time, the more important is the discipline and the constant rebalancing of the portfolio and not the market timing. And as you said that when we need it, what happens that we get driven by greed and fear. We become very greedy when markets are going up, want to put all the money at that point in time. And we become very fearful in a market like March, when there is a circuit down or market has closed for half an hour and that day you want to withdraw your money or want to stop your SIP. If we can deal with this greed and fear cycle, I think you do well over a long period in equity market.
All right. How does SBI or the Indian banking system control NPA? Are we not sitting on a time bomb?
No, that's a great question, because a lot of people have this fear that given the overall situation, is there going to be another round of big NPA cycle in India? In fact, RBI comes with this financial stability report. In fact, they also mentioned, and yesterday we released our comments on the monetary policy and the measures that RBI has taken. They highlighted in the financial stability report that there's a possibility NPA levels go up. Currently, RBI gave the moratorium 1, then moratorium 2. Maybe they may not reflect immediately, but at some point in time, a lot of businesses will have genuine challenges. The one good thing that RBI has done, and what a central bank had to do, which RBI has well done beautifully, I would say, a rate cut, a lot of liquidity injection, moratorium to tide over this difficulty over the few months. And the last but not the least, more important is the restructuring. For certain businesses that were doing well till February have got impacted because of these extraordinary circumstances, my view has been there should be some creative destruction. All businesses cannot be saved, but good quality business, good intention management, there we should do the right hand holding. And that's what the flexibility RBI has given, of course, with proper adequate safeguard. You don't want to make the mistakes that earlier, some of the restructuring plans, etc. of banking system has gone through. This time there'll be a lot of external verification, upfront provisioning. What RBI talked about, this KV Kamath committee will come with a report and a process in terms of how each bank going to do it. And I think that's a very, very good development. And I hope that if we are able to do it well, then maybe the NPA cycle may not be as big as what one would fear.
All right.
One of the interesting thing is that this is also one of the reasons why you are hearing that almost most of the banks and the top ranked banks who are sitting on a lot of capital, even they are raising a lot of capital. Like yesterday, SDFC raised capital or Axis Bank raised capital, and you have heard Kotak Bank few days back, Bandhan Bank sold a stake in the holding company, and you have heard from other banks also planning to raise capital because they want to be like, have a war chest to deal with the near-term challenges and prepare themselves for a higher growth on the other side of this crisis.
Sure. Okay. You mentioned about the sectors which will benefit from current situation like agri, tech, BPO. Unfortunately, they are not available in listed space. Also, what is your view on market and profitability over the next 12 to 15 months?
See, the next 12 or 15 month profitability is likely to get impacted, barring few businesses which have got less impacted by it. Maybe a consumer staples relatively less impacted. There are few businesses which may get slightly positively impacted, but large number of businesses will have challenge in the P&L, at least in the very foreseeable future. we really don't know next 1 year or 2 year. I mean, the earnings have got downgraded by analysts quite a bit over the last few weeks, because you know that in this shutdown, even when the demand revives, it's not going to be a very strong V-shaped recovery. We can expect a U-shaped recovery. I mean, the economy has come down, we'll have a recession, and then over a period of time, there is going to be a slow and steady recovery from that lower base, and lower interest rates, etc. are going to help. What interesting thing will happen over the next several years is that in each sector, there's going to be a consolidation. A lot of weaker players will find it difficult to survive. For the remaining incumbents, I think there is going to be a bigger opportunity to take a larger pie of the business as and when normalcy comes back. A lot of cost cutting or the new way of doing business will emerge. And we are clearly hearing that from almost every business that we are talking to. And you know, in difficult times, you think innovatively how to cut down costs or how to do business differently. And I think that will surely help. You know, interestingly, last 5-7 years on a higher capacity, because capacity utilization has been lower, wages as a percentage of revenue, interest cost as a percentage of revenue, and very interestingly, even corporate tax as a percentage of revenue has been going up in last few years for a variety of reasons. Now, of course, because the revenue is going to be even lower, there is going to be pressure. But now that interest rates are coming down, you'll have some benefit on the rate side. And as I mentioned, that people will think a hard way in terms of controlling every cost. So as and when normalcy comes back with lesser number of players, there is going to be profit growth for the remaining players. And you need to bet on them.
All right. A very pessimistic question. Will India be like Greece, a bankrupt nation?
I don't think so, and highly unlikely, simply because I think those countries were living beyond their means. I think in our country, the interesting aspect is, while the government debt, which I touched upon, alluded to earlier, that the fiscal space is limited, the government debt to GDP in India is relatively higher than some of the other emerging markets. But when actually we look at the overall corporate debt to GDP, it has actually come down in last 5-7 years, around like 4 or 5 years. And household debt to GDP has gone up in last 5 to 6 years, but that from a very small base. You look at the mortgages as a percentage of GDP. The other personal loans, or you know, the overall household leverage as a percentage of GDP is a fraction of the developed markets. Is a small fraction of let's say countries like China and some of the other emerging countries also. Because Indians by nature don't like leverage. We have never lived beyond our means. We always have some problems in pockets of the industry. And then of course now with the IBC and CLT and all, I think we have found a better ways of dealing with it. But otherwise, country as a whole, at such early stage of growth, we are at $2,000 per capita with such young population. There's a lot of growth ahead of us. And I don't see any reason to feel pessimistic about Greece. I gave you those data points where we are compared to where US was in 50s, where UK was in 60s, where Japan was in 70s, Korea, Taiwan in 80s, and China was in 2004-5. We are going through our own set of challenges. And I'm sure the near term, I mean, there are a lot of challenges to deal with, but I think over a long period, we need to feel optimistic. Yeah.
That gives a relief to every. So we're not going to be Greece. I mean, Greece is beautiful, but
so we will be Greece. Greece is also one of the oldest civilization in the world. We are of course the oldest civilization in the world. So there are few of those similarities in terms of philosophy, in terms of culture, and a civilization, and a great history to talk about. But the future belongs to us.
Yeah, I agree. What is your take?
It is like one small state of India.
Yeah. What is your take on small cap mutual funds for short-term and long-term performance?
That's another great question. And as I think you would have heard me a few times in this conversation, I said that when we are investing, we are not looking at whether the company is a large cap or a mid cap or a small cap. What are we looking at in a company? Whether the business has or the management has resilience, whether they have a fortified balance sheet, whether they have the liquidity, whether they have the ability to raise resources to deal with this crisis and survive in this crisis and to prepare for the growth after this crisis. whether they have the right kind of risk management in place. And risk management is not about putting the scenarios on the Excel sheet, but putting flexibility in place to deal with a lot of known unknowns and unknown unknowns. In February, no Excel sheet would have told you that 100% of your employees will be at home, or your plant would be shut, or your suppliers won't be there, or you won't have a truck to deliver to your customer, so on and so forth. How do you deal with this situation and adapt yourself? Now, as an AMC, our assets under management are at an all-time high today, and our people are at home. I mean, and we could never visualize in March that, you know, we can run our business without anybody in office, but we are working so well. So whether you have that resilience and the right kind of risk management, and the newer kind of risk going to emerge. Cyber, let's say the new virus, which can be riskier, even riskier than this virus, is actually a computer virus. How do you deal with cyber security? So right kind of risk management. How do you deal with your human resources? The third R is resources. You have to reskill your employees for this new world. A lot of your employees will have to be completely reskilled because the jobs are going to be different when you put your processes as virtual processes. You'll have to deal with them when they work from home. I think it's going to be a very, very different world. So how do you reskill them? How do you take care of their, you know, physical, mental, emotional well-being? And there are newer challenges with that. Every business leader has to keep that in mind. How do you take care of R&D and innovation? At various points in time in this conversation, I talked about newer way of doing business. There are so many disruptions. The consumer behavior is going to change. Policy is changing. Geopolitics is changing. Supply chain logistics is going to change. Everything is going to change. Technological disruptions, digital disruptions. How do you really innovate yourself? How much money you are spending on R&D? So R&D innovation, another important. Last but not the least, I think, which is very critical for businesses to do well, and that's in the context of large cap versus mid or small. It's not about your size, but it's about how do you build trust in your all your stakeholders and the relationship. The relationship that you build with your suppliers, your customers, your lenders, your employees, to your local community, to the government, to everybody, and it's going to really define your long-term success. How you deal with them in this crisis. Do you try to shortchange them to protect your P&L or balance sheet today, or you take care of them so that they will take care of you in the next crisis or when the opportunity comes back? And I'm not looking at whether the company is a large, mid, or small. We are looking at these traits in a management, and we are betting on those managements. The company may be a micro cap, will be happy investing in that business, because given all of these disruptions, a Zoom can really zoom out of nowhere, and a large business can just watch from like where they are. Because the large guys will also have a lot of legacy, which they will find difficult to deal with when the way of doing business will change.
All right. So, guys, with that, we have run out of time, and I can see a few more questions, but a lot of questions he has already answered in one way or the other. So a big thank you to Navneet. And so for closing remarks, I would like to invite Vikash first. Vikash, over to you.
Unmute me?
Yes.
Okay, so it's very difficult to talk in front of an expert of this level. Yet I want to say a couple of things. What India needs to do, and what is known worldwide as trickle-down economics. Mr. Munot knows about it. USA has always been the trickle-down economics country. So they fund the top-level companies, and they then create jobs or expect them to create jobs. I have a new theory, which I'm quite sure that Mr. Munot will correct me, is India needs to go by the trickle-up way. What we need to do is, after this crisis, because Mr. Modi also said once that I'm not funding heavily because the wheels of production and economy are not yet moving. He said I'll fund when this starts happening. In my opinion, the last funding or the big announcement was the 20 lakh crore, which really did not mean that much money in the hands of people. It was in very different ways that it was funded. What I really think as a layman, as the country needs to fund the whole economy by 100 lakh crores at one shot, and that also just give it to the poor, to the BPL, the below the poverty line. Let them all get money and go out and shop. When they do go and buy whatever they need, that money will flow up to the people who produce services and all that. So in short, I'm talking of trickle up. So let's hope we can do that. All the best, and thank you very much, Mr. Munot. It was absolutely smashing listening to you. Thank you.
Thank you. My pleasure.
Thank you so much, Navneet. It was an absolute pleasure to host you. Thank you so much.
My pleasure. Thank you so much.
All right. Thank you, guys. Thank you.